All right, guys, we are live, and I just tried the first live video, but the audio wasn't working. And so we tried another one. Let me know if we're still having issues, but I think we should be good to go now. And I'm so excited for this video because I'm going to dive into what you need to know to be able to start investing in real estate. So we're going to talk about everything, starting with financing, moving into whatever other questions you have. But the biggest question I get from people who are wanting to start is they say, Chandler, how much money do I need? What do I need to do to be able to get into a property? Would you suggest doing something else, or would you suggest trying to purchase a property? And what I would say is right now, with how financing works, you can legitimately get into a property for only 3.5% down. Now, there's a lot of other things that go into it, but that means that your barrier to entry is absolutely incredible because it is so low. So if you're thinking about getting into investing in real estate, I would beg you to save what you need and then make sure you're approved for financing. You're good to go there. And then you're going to be able to live in the property, preferably 2 to 4 units, for almost nothing, because you can get it for such a low down payment. Now, obviously your numbers have to work and you shouldn't dive into anything, but if you do this properly, you can start investing with hardly any money up front and put yourself in a place where you can get into an investment property immediately with a very low down. And if your numbers work, you're going to be getting appreciation, principal pay down, cash flow, all of the huge benefits that come with investing in real estate with very little money. Now, if you've got a lot of money and you're starting to invest, maybe living in the property doesn't make sense. But if you're single, or even if you're freshly married, or whatever your situation is and you're wanting to get into property, this is an awesome opportunity. Now, I saw someone say, Chandler, well, I live in California. There's no way I can pull that off. That's true, all right? I understand property there is substantially more expensive. You need to save more, but the same principle applies if you're gonna rent or do anything else there. So if you're willing to move, you can get into property a lot sooner. Whether you're getting in with 3.5% down or 25% down, that's just life, and it's unfortunate. However, there are so many markets where you can find a property for $100,000 that's a good place to live, maybe give or take a little bit of fix up. But if you push into the $200,000 or $300,000 range, still, if you're only putting 3.5% down, you could be under 10 grand and be in a very nice duplex or triplex or fourplex. And so right away, if you're wondering, how much money do I need? I would say you don't need a lot. I mean, under 10 grand is not that much to be able to get into an incredible investment where you could be pulling a 30 or 40% return. How can I find the best deals? Guys, I've made a lot of videos on this. I also just released my course. It doesn't go live till tonight at 11:59 p.m. You've got 1 day left to get a killer deal. But what I would say to answer your question is, once you figure out the numbers, it is very simple. And I know numbers scare people, but it's not that complicated. If you go onto my website and you don't want to buy my course, that's awesome. You can download my app. All right, it's CDS Rental Calculator. It's on Android and it's on iOS. And there's a video with that that shows you exactly what you need to look for numbers-wise in 20 minutes to get the entire breakdown of everything. So go and check that out. But I promise you, it's not that complicated. At the end of the day, you need a certain amount of cash flow to get a certain amount of return. And so once you know what that cash flow is, then it's just taking what your income is going to be, taking out your expenses, and making sure you're getting the return you want. Now, that's a very dumbed down version, but the app, I've worked hard to work on it, and the Excel sheet, both of which you can download completely free and watch the video to see exactly how to run the numbers. Let's see. Hey man, thanks for doing this. I'm a real estate agent, first year on track to make 100K. Even more next year. I'm pretty dead set on buying fourplex as my investment. Guys, buying multifamily real estate, setting money aside to pick up even one property a year, you can get to the point where very quickly you're scaling up to where you're getting 100 units. And that's why I made this course. Is it's so simple if you know what you're doing, and you can either save or increase your income to where you've got the money to start investing. It's incredible how it's so exponential. I mean, the more time you spend finding and buying real estate, the more that you acquire, the faster it starts to come and the more creative you can get. And so if you're in a place where you're like, Chandler, I don't have a lot of money right now, anyone can get to the point where they've got 5 to 10 grand saved. And I promise you, there are lots of properties that you can get in for your first one. And once you get hooked, you're going to find ways to increase your income or keep your same income, but save to build that portfolio. And it really builds on itself. Watching from South Africa, I love it. Would you purchase a property in cash if you couldn't get financed? Guys, there's so many people that do this. But here's the deal. I personally did this. I couldn't get approved for financing. I didn't know what to do. So I said, you know what? I'll buy a $70,000 condo. It's a great 2-bedroom apartment, nice place, had an HOA fee, but whatever. And so if that's what it takes to get your confidence and you want to get into something, go for it. Just make sure it's a property that you can refinance out of if you're going to take that. Because here's the deal. With that $70,000, had I used it properly, I could have gotten 4 duplexes at that time in my area if I would have done it correctly with a good down payment on them. And maybe that's an exaggeration, maybe 3, but that would have like 10x'd my cash flow, would have 10x'd my appreciation, my principal pay down, so many different things. So I'm begging you, understand leverage, understand how debt works, because if you use it properly and you keep reserves, you can really put yourself in a great place and build your portfolio so much more quickly. So I would say don't do cash unless it's your only option. And if it's your only option, make sure you've got a good option to refinance. And the reason I say that, my condo, they wouldn't let me refinance because there's some weird rules with condos. Let's see. What are your thoughts on Fundrise? Here's my deal with Fundrise, all right, or other systems like it. You can get a return, but a lot of times you're getting a substantially smaller return than what you would if you owned the property, and you have no control, all right? You're not maximizing your profits. If you take the time to learn and to figure out how investing in real estate works, you can maximize your portfolio so much more quickly, and then you have so much more flexibility to 1031 those exchanges, to 1031 exchange the properties you own, to refinance those properties, to get creative with buying and selling, to where you're going to be able to scale and get a much larger return. And this is why I always push, like, you're giving up so much money when it comes to investing, doing those things. I'm all about, all right, I guess, doling things off to other people to do within investing in real estate, like managing and other things. But when it comes to finding and buying deals, you've got to learn how to do it for yourself, because there's so much money you're leaving on the table if you don't. So let's see. Oh, I love this question. It's not with real estate, but what do you recommend teens do during the pandemic? Guys, if you're in a situation where you don't have a job or you're a teen and you don't know what to do, there are so many sales opportunities. Honestly, if crap hit the fan for me and I lost everything, I would go knock doors and sell something, all right? It's so easy to go sell your services as, you know, cleaning their yard or mowing their lawn or cleaning their gutters or detailing their car or whatever else. So if you're a teen and you're having a hard time finding a job, or if you're anyone having a hard time finding a job, learn how to sell something. Go find a job where you sell on a commission, or just go sell a service that you can do, and you're going to make more money than any $15 or $20 an hour job, if you could even find one of those right now. Last year of school, no debt, and have a job. I'll be starting paying $70K a year and already have $20K in savings. Thoughts on price points to target for a duplex? All right, here's what I would say. If you will live in a unit and you're saying you'll make $70K a year and you have $20K in savings, you're already there. You've got the down. I think you can find a very decent duplex, at least in my market, for between $100,000 and $200,000. Now, if you're in a market that's different, you need to decide, you know, what you're looking for and what you're willing to live in when it comes to A, B, C, or D properties. That'll get you like a C plus to B plus property where I'm at. If you want an A property, just remember you're not going to get as high of a cash flow in an A property. And if crap hits the fan and rents ever do drop, they're going to take the hit, because all those people are going to move in to the B plus properties that I own, and my rents, if anything, are going to go up because there's going to be more of a demand for that price point. So I would pick a mid-range price point in a good neighborhood that you're comfortable living in, and whatever that is price-wise for a duplex or a fourplex to live in, that's where I would go if I was just starting and I have the ability to live in the property. What's the best kind of commercial loan to get to buy a 14-plex? Here's the interesting thing. There are not as many different options when you get into commercial lending. Once you get above 5 units, it's like, this is what we can offer you. It's a commercial loan on your property. Usually they're going to want 30% down. Usually they're going to want a little higher interest rates, and they're going to want the terms changing every 5 to 7 years. And so find the best rates and terms you can, get different people competing, but it's not like you've got this option to live in it and get a better loan, or that there are a ton of different options. Now, if you can find a broker that is connected with an insurance company, I've seen situations where you can win big and they'll lock in your terms for longer than just every 5 or 7 years, and they'll get you a good interest rate, but then you're paying a lot more in closing costs. You've got to find that happy medium that you're comfortable with if you're going in those bigger units. What is the best way to start as in step 1? Love this question. Everything is a plug and play system. So you need to sit back and you need to say, all right, how much money can I get to invest and what will that buy me? If you're in a place where you have 20 grand, then you got to look and say, what can I get into for 20 grand? Will that only get me a single family home, or can I find a duplex or fourplex? Preferably wait until you can find a duplex or fourplex. But if you're in a place where that's going to be a couple years out and you can get into a single family home, get into a single family home, pay the mortgage for a year, live out and do it again, or move out and do it again, and then rent that unit out. But I would find what I can afford, and I would try to afford something as soon as possible so you can get into real estate so you can start capitalizing on those returns. Once I know what my money situation is, what I can afford, you're going to want to make sure that you get pre-approved. You know what loan you can get and the most you can get pre-approved for, and then you can start shopping because you know your price point. For me, when I started, it was like, all right, I'm just going to buy whatever. That's a terrible strategy. If you know I'm going to save or I'm going to work until I can get approved to be able to buy a $300,000 duplex or $300,000 fourplex, then stick to that and only look for that. That way, when you find the deal of a century, even if you've been looking for a year, you know you're ready and you can jump on it. And I think that is the step you need to take, is knowing where your financials are at, knowing that you're ready to jump on a property, knowing what the numbers need to be on that property so that you can immediately jump on it. When do you get the max points on your credit? That's a very, very broad question. Pay your bills on time. Make sure that you've had a credit card for as long as you can. And if you're doing everything right, and you can watch a video I did a couple weeks ago on credit, but if you're doing everything right, you get big hits every 3 months. So like 3 months, 6 months, 9 months, a year. And so that's why you want to have good credit for as long as you can and build that up. Hi, Chandler. How would you see a possible fall in real estate prices and turbulence in the economy affecting someone who is looking to buy their first rental? Here's the deal, guys. Everybody wants to buy when the market is down. The problem is no one wants to risk buying and then having the market go down. And so what I have always said, and what I will continue to say, is there is no time like the present to buy real estate. Now, the things you've got to make sure is you've got to make sure you're buying in a market that there is a need for housing. I'm in a place right now where I know there are people moving in. We have a massive shortage. We're a long ways away, even with all the craziness in the economy. We're a long ways away from rents dropping because there's such a huge demand. And when there's a demand, all right? And so you got to make sure you're in an economy where there's going to continue to be a demand, but you also need to make sure you're buying where your numbers are right. Because if you're buying with a 15% cash on cash return, even if rents drop, there's no way they're going to drop so much that you're not still positive cash flow. And that's why I always tell you, if you're in a market right now and you're thinking about starting investing in real estate and you're going to want to buy for just appreciation and you're banking on hopefully eventually getting cash flow or being able to sell 5 years from now to make that money off the appreciation, that's a bad strategy. You want to buy real estate as a long-term investment where you know you're going to cash flow and you know long-term, regardless of what happens, you're going to get that appreciation. Otherwise, I personally wouldn't buy an investment like that because then you've got a lot more risk. But for me, I'm always buying, and as long as I'm buying and I'm holding to the numbers, even if things dip, I don't care because I know it's a long-term investment. I'm still cash flowing and I'm going to be in a great place. And so my advice to you is make sure that those things have happened for you, and then there shouldn't be any worries with you purchasing. What do you think about investing in properties in areas with low population? Guys, this stresses me out. The lowest I would do is like 80 to 100,000 people, and I would make sure that they don't all rely on one business or, one specific thing that if taken away, you could end up in a lot of trouble. Because if you're going in and investing in a 7,000 population market that's, solely depending on a mill, that would terrify me. Because maybe you can find huge returns, but you don't know long-term where you're going to be. Investing in real estate needs to be a long-term view. It needs to be something where you know long-term you're confident and comfortable that it's going to continue to cash flow, it's going to continue to go up in value, and this whole city isn't just going to disappear. Now, does that mean you can't have some volcano spurt up in any city? I mean, odds are low, but I want to find a place where my risk is the lowest of something like that happening. What do you think is good? Let me see. What do you think is a good starting amount to invest? 20K, 40K, best markets for beginners. I'm in California. I've noticed as you get on the edges of the United States, you're the most expensive. And as you move in, you start to find areas where, one, you're dealing with less storms, you're dealing with less hazards that could come. And so that's a big advantage on saving on insurance, but you're also finding areas that right now they're getting a lot of population growth, but rents are substantially lower, housing prices are substantially lower, and they've seen a lot of appreciation. I mean, historically we would say those edge cities, oh, they're getting more appreciation than anywhere else, but you can look and see those areas that are getting huge appreciation, but also huge cash flow in the more central United States. Those are the places I would check. And at that point, figure out what you want to buy. If you're set on getting a duplex and you're content with that, then the second you've got enough to get into a duplex that's in a, C plus to B plus neighborhood and a C plus to B plus home, that's something that I'm going to jump all over that I think will be a win. So I would jump on that. I'm not a guy that's going to invest in California. Now, it doesn't mean people aren't killing it. You can kill it in any market. You can always find incredible deals, but that's not my jam. I want to know I've got strong cash flow, and I want to know I'm in a market that's going to get appreciation and cash flow, and I can find that. How long should you wait till your next deal? 6 months between? As long as the money's there, I would be buying deals, all right? For me, I bought a condo and I waited, and once the rents came in, I went crazy. I had money in the bank, and so I bought a duplex and then a duplex and then a fourplex, and a lot of that happened really quickly because once you see the money coming in, once you see a property's cash flowing, once you recognize that not every tenant you put in is a deadbeat that you've got to evict or that you're worried about vacancy, and you realize, hey, this is just the norm. Like, people need a place to live and they pay rent every month, and that's how things work. You're going to catch fire, and I don't think there's anything wrong with purchasing properties quickly. The only thing you got to watch is your credit. You got to make sure that your credit can cut it, and that's why I would really, for me, I get my FICO so I can always see how my credit's responding to what I'm doing, because with me, when I started, I was very young and I didn't have hardly any credit history. So as long as your credit's good, your debt to income's good, I would go crazy and buy as much as you can, as fast as you can, as long as you've got the reserves there. Where do you get your yearly expense percentages? Love this question. 6% vacancy, 12% maintenance, 7% management. I started with those all a lot higher. The way that I've gotten them now is I can take all of my properties that I have and I can see exactly where they came in on the year with my management company and the way we do things. So that doesn't mean it's going to work for you. That's why I would talk to your management company. And if I was starting investing, I would do a lot of research to see where other investors were at with their expenses and where my management company is at with their expenses. Because then you're going to be able to make a lot more educated decision on, hey, how should I run my numbers? Because the worst thing you want to do is run your numbers the same way that I've run my numbers and realize that in your market or in the kind of home that you purchased or investment you purchased, that those expenses are way off, and now what you thought was a 15% cash on cash return is a 1% cash on cash return. So you've got to do some research on your market. And guys, I talk about this a lot in my course, and I am so excited about this course. Hopefully I haven't pitched it too much, but I put in hours and hours of work on this course, and I'm really excited to see what you think, because it's focused on helping you grow and acquire real estate, but it's really focused on helping you understand your market, and so that these more broad questions, you're not going to get an exact answer, but you're going to get an answer on how you can find that exact answer for your market so you know exactly how to invest so that you're protected. Lowest cash on cash return that I would do in this market, 15%. Like I wouldn't drop below. Historically, when things were good, I would push it a little lower to 10%. But right now, I just think there is potential craziness that I don't know what's going to happen, but I'm not going to lose with a 15% cash on cash return in my market. I'm comfortable with that, and that's where I'm going to buy. Do you think buying a bashed up duplex maybe? I think, so everyone always asks this, Chandler, should I buy turnkey or should I buy something that needs work? It totally depends on if you can find turnkey that meets your numbers. The only reason I would ever transition into buying stuff that needs work is if my numbers don't work. Because then by doing work, you can find investments at a discount that then after the work, your numbers work better. But don't go in and say, oh, I'm getting a 20% cash on cash return if I do this turnkey investment. However, over here, I can also get a 20% cash on cash return after I do this fatty renovation that's going to be a lot of stress and a lot of new stuff to me for starting investing. I wouldn't do that. Buy the turnkey property. Stay as much turnkey as you can as long as your numbers work. Now, once deal flow gets hard, that's when you can transition into putting in more work to finding deals or making deals work. Is renting a house by the bedroom a reasonable and scalable plan? Because the market that I'm in doesn't have many multifamily properties, but I want to get more cash flow. You run into some issues with liability, with city rules, county rules, all of that stuff. It all depends on that. And so I would say don't buy a property because it works if you're renting out by the bedroom. Now, if you want to rent by the bedroom and liability-wise you're comfortable and you're not worried about the other stuff, then send it and get extraordinary cash flow. Just make sure if you get shut down and you have to rent it just to a single family that you know you've still got enough cash flow for it to be a good investment. Same goes for vacation rentals. It's okay to buy a vacation rental for your first investment, just so long as if things go bottoms up with vacation rentals, like we've kind of seen with this virus, that you could immediately put a tenant in there and still be getting your 15% cash on cash return. All right, creative things are there to maximize cash flow, not to say, oh, I can bend on cash flow and buy at a worse rate because I'm going to be doing a vacation rental or filling more bedrooms, because now you're at a scary place where if that gets shut down, you're out of luck. Without a full-time income, how would you go about financing these rental investments? I only bring in $12,000 in alternative income per year. Guys, that's hard. You got to either have a ton of money and put a lot down on properties, which I don't like doing, or you've got to prove to them you've got good enough income to sustain you so that you can get a loan. And so a lot of times, even if it means going and getting a job for a year so that you can get approved for a loan, it's worth it. Now, once you build up a lot of rental properties, like me right now, I could totally quit because my properties are cash flowing well enough that I would have enough to continue buying property. However, I would be limited still. I wouldn't be able to buy as much property as I'd like to if I kept my other current job that I'm working on. And that's why I do that. Well, not the only reason, but it's important to have the right stuff on your debt to income and on your taxes. You got to pay to play, and that means you got to be making an income, paying taxes, so you can show that and get financing. Let's see. Do you do your own taxes? No, please no. Go get an accountant. They're not that expensive, and I promise you it's worth it so that you have someone to call on. This is one of those things where you've got to think big. It's worth investing in people that are professionals in their fields so that you do things right and so that you have big picture to be able to scale your business. I'm such a strong believer in having the right connection with the right lawyer, with a management company, with an accountant, with those people that are the professionals in their field, and you find the best of the best. And that way you can plan on scaling and getting good at what you're good at doing, which should become finding and buying properties and building an income with whatever your active income is. To me, it's not worth investing my time into becoming my own accountant and taking on that liability when I know my time is much more valuable somewhere else. It pays me more money somewhere else to be able to hire an accountant and do that stuff on my own. I can only afford a condo here in California. Is it worth starting there or saving for a different property? This is a tricky one. Condos have weird rules. If you're willing to live in a multifamily unit, I personally would wait until you can get a duplex, triplex, or fourplex, or just do a single family home. Now, that doesn't mean I'm completely off of condos. If your numbers work in a condo, even after the HOA fees and everything else, it could still be a great investment for you. I've just found financing is a little more difficult in those. So as long as financing works and the numbers work, it's just like any other investment. And I think it could be a good thing for you to live in for a year and move out. Or if you're just buying it as an investment property, it still could work. If it's cash flowing well, even after the HOA fees and other things, send it. Would you recommend a Canadian investing in Canada or going straight to the States to invest in real estate? There's so many advantages to investing in the States. especially tax-wise. So I'd say come here, but I've got buddies, Matt McKeever, Jeff Weibo, guys up there that have absolutely killed it. So you can kill it anywhere, and I think that's one thing you got to remember. No matter what market you're in, you can thrive and you can do well. And that counts for California, New York, all of those areas. There are people that are finding a way to find cash flowing properties, and so they're everywhere. There are just some places that are definitely easier than others. All right, guys, I'm going to answer one more question, then I'm going to wrap up this live video. This was a ton of fun. Is private lending good and safe, as banks won't give a loan to me as I am an immigrant? So can we start by using private lending? If you have the opportunity to transition and if the interest rates work for you to still be cash flowing and get a good deal, I wouldn't hesitate to use private lending if I'm find a way to cash flow on a property and eventually switch the financing. But if you're stuck with private lending forever, if you can get good interest rates, then yeah, who cares? I mean, if they're coming down to where you're dealing with a 4 to 6% interest rate, that's higher than what you'd get at the bank, but that's still more than enough for you to find a property where you can cash flow enough. You'll have to look a little harder, but you can totally pull that off. But if you're paying, the standard, for me, when I've given hard money, it's like 12%. And if I'm on a 12%, it's gonna be really hard to find a property that's cash flowing. Now, if you can do it, then yeah, that doesn't scare me as long as you're cash flowing as much as you need to be cash flowing. Awesome. Guys, this has been incredible. Thank you so much. I think I'm going to start doing these more. Let me know if you think I should do the live videos weekly. And again, if you haven't already, make sure you jump on and buy the course. I will make sure it is worth every dime. And right now, we're pre-launching it. Well, we've been pre-launching it. We're launching it tonight, right before midnight Mountain Standard Time. And with this course, I have worked so hard. I know there are going to be some issues or mistakes or things in it, but it is incredible. And to pick it up for only $199, I'm telling you, it's a killer deal. We're going to jump the price up later once we hit midnight tonight. But if you have any questions, if there's anything it doesn't cover, I'm going to be watching emails and making sure we make tweaks and we improve the course as we go. And that's why I'm offering it at this crazy discount, is I know we'll have things that are missed. However, I think right now, even with things that are missed, this course has gone above and beyond. And so if you haven't already, hop onto the website. It's chandlerdavidsmith.com. You can click the course and you can get it till the end of the day at only $199, and then I'm going to bump the price up to $500. And so let me know if you have any questions about that. You can PM me on Instagram or other things, but I'm so excited about this course, and I'm excited to get feedback from everybody that's gone on and snagged it. So thank you so much. And guys, have a great day.